Hello everyone and welcome back to the Sartorial Wealth channel. My name is Shiraz Ahmed, and in today's video I'd like to talk to you about the recent surge in market volatility and the underlying economic drivers, with a particular focus on the newly imposed tariffs by President Donald Trump and how they may affect your financial outlook. Now, before we dive in, please note that all the information and market data shared in this video are accurate and up to date as of April 11th, 2025, coming here straight out of Toronto. Now, over the past several days, markets have experienced significant turbulence. The S&P 500 dropped about 6%. The Nasdaq fell again also about 6%, and the Dow Jones Industrial Average lost about 2,200 points in just 2 sessions. In total, more than $6.6 trillion in value was wiped out from the US stock markets. European and Asian markets have also seen sharp declines driven by investor fears and broader economic uncertainty. A lot of this market disruption is being attributed to the recent announcement of sweeping new tariffs, which have triggered concerns about inflation, trade, and of course global growth. Now, on April 2nd, 2025, President Trump declared a new round of tariffs, including a 10% universal levy on all imports with significantly higher rates on certain countries. China, for example, now faces a tariff of up to 145% on its exports to the United States. Now, these tariffs function as taxed on imported goods, meaning that businesses will pay more to bring in raw materials and products, and those increased costs are likely to be passed along to consumers. Now, as of April 11, 2025, Canada is actively responding to the United States' recent imposition of tariffs, particularly those affecting the automotive sector. In retaliation to the United States administration's 25% tariffs on Canadian vehicles, Prime Minister Mark Carney announced that Canada would implement an equivalent 25% tariff on US-made vehicles imported into Canada. These countermeasures took effect on April 9, 2025, and are intended to remain in place until the United States rescinds its tariffs on the Canadian auto exports. The impact of these tariffs are already being felt within Canada's automotive industry. Now, to mitigate some of the economic strain on workers and the industry, the Canadian government has established a $2 billion strategic response fund aimed at supporting affected sectors. Now, beyond the automotive industry, the tariffs have broader implications for Canada's economy. Now, the Canadian government has also imposed a 25% tariff on a range of US goods, including steel, aluminum, and other products, in response to, of course, US's tariffs on Canadian exports of these same style of goods. These measures are part of a Canadian strategy to promote economic interests and to encourage the US to reconsider these trade policies. Now, in addition to these economic responses, there is a growing sentiment within Canada to reduce reliance on the United States' trade. The Canadian government is exploring opportunities to strengthen trade relationships with other international partners, such as Europe and Mexico. Now, of course, this is all to diversify its economic engagements and, of course, reduce its vulnerability to US trade policies. Now, the situation remains dynamic, and the Canadian government continues to monitor developments closely. Now, this is all seeking a desire to balance economic resiliency with strategic international partnerships. Now, the economic consequences may extend well beyond higher prices. Now, Federal Reserve Chair Jerome Powell has cautioned that these tariffs could lead to increased inflation while simultaneously slowing economic growth, an especially difficult combination for monetary policymakers to try to navigate. Now, meanwhile, JP Morgan Chase CEO Jamie Dimon has warned that growing trade uncertainty may erode consumer confidence and discourage corporate investment. This might also possibly push the US economy towards a recession. Now, on an international front, the European Union has signaled that it will likely to respond in kind, further raising risks of an all-out global trade conflict. All right, now, with all this said, what can you do now? With all this unfolding, many investors are understandably asking, what should I do now? First, and most important thing is to keep your long-term financial goals in perspective. Now, market corrections and periods of volatility are normally part of investing. Of course, reacting emotionally or making abrupt changes to your portfolio based off of headlines can often do more harm than frankly good. Now, secondly, it's a good time to review your positions in your portfolio and ensure that it remains well diversified across different sectors and, of course, asset classes. Diversification remains one of the most effective ways to manage risk. And, of course, finally, making sure that you're having ongoing conversations with your financial professionals. In times of heightened uncertainty, your strategy may need small adjustments, but those decisions are best made with the guidance that reflects both your personal goals and the current macroeconomic landscape. Now again, I want to emphasize that all the commentary analysis that is in this video is really based on developments up to and including April 11th, 2025 in Toronto. The markets may continue to evolve, and we'll be here to help you ultimately try to make sense of all this, and of course, as these things continue to unfold. This video is for informational purposes only and does not constitute financial, legal, or investment advice. The views that are expressed here are ultimately those of myself, the presenter, and of course, as of this recording date, and are subject to change. Please consult a licensed financial advisor before making any investment decisions. Thank you so much, and take care. Have a great day.